Ashish Gupta joining us. He's CIO at Axis AMC. Mr. Gupta, thank you so much for speaking with us. And of course, you were on the panel which looked at some of those proposals that SEBI has put forth. So, is it harsh the way that these regulations are going forth? Could a more calibrated attempt have been made, or do you think that this is what's appropriate, looking at the number of volumes and the profile of investors who are coming into the F&O segment?
So, morning, Tamana. I think SEBI, the guideline they have released has come after due consideration. I think they took a consultation, and if you see SEBI press release, I think they highlighted that they got thousands, I think more than 10,000 people giving their comments, and all were duly considered before coming out with the final guidelines. In fact, if you see the implementation schedule is also calibrated over a period of time, nearly 6 months. So I think SEBI has been quite pragmatic in looking at this space because there was clearly a crying need for action. We have seen, as SEBI has also characterized, the retail frenzy that comes in, particularly around weekly expiry days. And we are seeing this in the market as well. So I'm sure on the shows you see the kind of volatility we have seen in the past few weeks, in the last half hour or last hour of trading, whenever there's a big weekly expiry. And SEBI document highlights that nearly 25-30% of all volumes happen in the just last 1 hour of that expiry. So I think there was some need to rationalize the activity here because it adds both macro and micro risks to the market and the economy.
Mr. Gupta, I wanted to understand from a sophisticated trader point of view, a trader or a participant who actually deals with substantially higher volumes, substantially larger funds in the futures and options space, do things change going down, coming down to November 20th down the line?
Oh, I think the whole aim of the regulation is not really to impact the sophisticated investor. It is actually really to protect the small retail investors. And some of them were getting pulled in because the ticket sizes of some of these option contracts was very low. And in fact, if you see the SEBI data, most of the losses on this trading activity was being borne by actually these investors. And I think what SEBI is trying to do is make sure these kind of investors don't get lured into this activity. And as you would have seen in the SEBI document that came out a couple of weeks ago, even in the last financial year, 91% of retail traders actually lost significant amount of money. I don't think there is going to be an impact for the sophisticated investor, but for the fact that the counterparty, which is the small retail investors, hopefully will not be as meaningful as was earlier.
Ashish, was one way of doing this then identifying who could trade and have a filter, say on income tax returns filed, or those kind of parameters? That because if you wanted to keep small investors out, then define and then target small investors from staying out. Was that one way to look at it, or was this the best way? Because this is a more broad-based kind of an action, including reducing the number of weekly expiries.
I think the challenge with some of those measures is really how well they can be executed, right? So, and where does the control lie? So it has to be declaration based, and there are obviously challenges. In India, how many people file income tax returns, you know how many people can have an account, and if someone else trades on that account. So how do you really implement those? So there are several suggestions, and I'm sure SEBI will look at those, whether there is sophistication in terms of knowledge of the investor, minimum threshold of whether net worth or, as you said, income. But really, some of those look better on paper, but really implementing them is very challenging.
There's always the element of human behavior and needing to take that speculative stance when it comes to equity markets. Now that this
Yes.
avenue moves out of the way, do you think that there could potentially be a shift towards relatively smaller stocks once again in the cash market? Do you think that there could be some changes that potentially that segment of the market that would undergo this?
Sure. So I think SEBI in their statements have spoken about the fact that they also believe that speculative element is an integral part of the market. It has really several positives in the way it impacts capital markets, whether it's in terms of liquidity or price discovery or arbitrage. And the idea is not to kill all speculative activity. In fact, if you see on single stock futures and options, and in particular options, SEBI a few weeks ago has actually come out with the detailed guidelines, which will allow even more stocks to come into the ambit of single stock options. What here is being looked at is really one particular segment, and this relates primarily just to index options, right? And that too just a weekly expiry, and within weekly expiry, the frenzy trading that happens on the expiry day. So I think that is what SEBI is looking to do. It wants uh, more participants to come into the market. And if we look from a medium to long term perspective, we want investors coming into the market to get a good experience of the capital market, right? And if you see the numbers that were put out in the SEBI report a few weeks ago, in the last 3 years, nearly 1 crore investors on average have lost about 2 lakh rupees. And that is a very significant amount of money. So that's about 2 lakh crores of losses for retail investors. And most of these investors are less than 30 years old. So that's not really the experience of capital markets we want to give to our young investors. I
Yeah,
think we
what do you say to those who argue that these investors will then move on from derivatives to maybe online gaming or to online lotteries or to dabba trading, because money will find its destination, isn't it?
Yeah, so I think if you look at the online gaming industry, it is already about 10x the options market, right? And actually, and I personally would not want our capital market players to really come in and see this as equivalent of online gaming, right? The fact that online gaming is growing at a pace, that is a separate matter of concern, and 300 million people are already active there. That is another issue of concern, right? But I think the fact that about 40 million people are actively trading derivatives in this market and incurring this magnitude of losses is really what we need to control.
All right, Mr. Gupta, we leave it at that. Thank you so much for joining us and giving us perspective on the latest changes that have been brought forward by the SEBI as far as the futures and options space is concerned. Again, this is something which is developing, and we'll get a much better idea of how markets are going to take this on come November 20th and after that.